Welcome back. We're in session 2 on day 3 of the 2010 Lifestyle Summit right here on the Gold Coast. I'm sitting here with Colin Piper. A few of you may know him because he does the market update, the weekly one from Distressed Markets on Property. Now, Aussie Rob has always said to all of our traders that you need to have make money through trading and make money through property and have a balance. Now, Colin, how do you strike that balance between investing in property and trading?
Well, I guess the difference in the Asher there is that, like, as Aussie Rob says, the trading gives you cash flow, and property on the other side gives you, capital growth and wealth. And obviously, you've got to have a balance of both in there. Traditionally, if you've looked at markets out there, when the share market declined, the property market went up, and vice versa. When property started to go down, people got back into the share market. But then again, most people that trade shares, as you and I know, aren't as educated as the group of lifestyle. Most of those just simply buy a share, put their hands together like this, go down on their knees and pray like hell that their shares are going to go up. Because that's the only way they know how to make money. They get burnt, they step out and they come across to property. But everyone needs a roof over their head. And I think that's the key to property today, and that's why property appreciates all the time. People always have to have somewhere to live.
Okay, so when you're looking for property, what 3 key things do you look at?
Well, obviously for me, when I'm looking for property, is definitely government spending. I want to know where the government's parking their money. If they're putting 200 or 200 million, or they're putting 2 billion or 25 billion, as they're talking about in Queensland at the moment, into transport infrastructure, I think it's wise that we invest some money alongside it. Why? Because along with that infrastructure spending, obviously you're going to have industry. It's going to generate jobs, employment. Again, people are going to need somewhere to rent or somewhere to live in that time period. So, and the third thing for me is the demographics. In other words, how much people earn in that area, their lifestyle choices, how many cars they have, kids, education, and those sorts of things. But for me, I'm very much focused on, where the industry is in particular, because that's one of the key criteria for me.
That's great. Now, what is the benefit of buying distressed properties as opposed to, just your standard normal properties?
Okay, great question. I think the thing about buying distressed stock, and when you buy any product, and even if you're trading shares, you should always have an exit strategy. The first thing by buying a distressed stock and buying it, say, 30-40% below its current market value, you have room to move if you need to get out of that property. Secondly, the lower you buy, the greater your return. Because obviously the smaller mortgage you're going to have there, the lower the repayments, the higher the return on the other side. So the great thing about buying a stock, we do all the research, we do all the hard work. So yeah, guys, I really appreciate the fact that we get all the material for you. Depreciation schedules, actual valuations, rental appraisals, demographics, suburb histories, all those sorts of things that we're looking for to make sure you're making an informed decision. Because quite frankly, probably the largest buying decision that people make in their lives.
Definitely. So for all of our lifestyle traders out there who are looking to to invest in property, where can they get a hold of these distressed properties? Where can they find the information about that?
Okay, all those that come on board as a member, simply go to www.distressedmarkets.com. And there's a login there, and that then takes them through to the members area, where they can find all the properties.
Awesome. Now, Lee is on stage right now as I'm talking to Colin, and he's going through the deadly mistake that traders make, which is being overconfident. So I'm going to be back again, and we'll talk to Lee again and find out how you guys can avoid this mistake. But thank you so much, Colin. Thank you for sharing with us on property. And we're almost to the end of day 3. I hope you guys have had a good weekend, and I'll be back again later.